It's Friday, July 21st. This is the Daily Market Comment by Raf Boyajian. I'm Christina Marujos and thank you for joining us at XM.com. Investors pared back their expectations that the Federal Reserve will embark on an aggressive rate-cutting campaign next year after yet another solid jobless claims print on Thursday, which cast doubt on the notion that the drop in inflation alone would be enough for the Fed to ease up its fight against rising prices. Rate hike odds for the remainder of the year edged up slightly after the data, while traders now anticipate fewer cuts in 2024. The moves weren't dramatic, but underlined the risks heading into next week's FOMC meeting. The Fed is widely expected to hike rates by 25 basis points, with markets still believing that this will be the last, even though the message from Chair Powell of a further similar-sized increase is unlikely to change. The U.S. dollar, which had already started to recover from its post-CPI sell-off, jumped higher after the job figures, mirroring the spike in Treasury yields. The dollar wasn't the only currency receiving a leg up, though. The British pound managed to slow its slide after UK retail sales grew more than expected in June. Although the June inflation report was a game-changer for the interest rate outlook in the United Kingdom, the Bank of England's credibility is at stake if it doesn't manage to get a grip on sticky core inflation. Another currency coming under pressure this week has been the yen. The dollar's rebound has cut short the yen's attempt to recoup some of its heavy losses from recent months. Exacerbating the renewed sell-off were remarks from Bank of Japan Governor Ueda earlier this week, downplaying the prospect of an imminent shift in ultra-accommodative policy at next Friday's meeting. Stocks in the United States ended Thursday mixed, with the S&P 500 and Nasdaq Composite closing lower, while the Dow Jones bucked the trend to finish higher. Traditional stocks outperformed on the back of better-than-expected earnings, including Johnson & Johnson and Travelers, lifting the Dow Jones. Airlines and financials rose as well, but tech stocks came under fire amid a somewhat delayed reaction to Netflix and Tesla's disappointing earnings result this week. Risk sentiment soured after the jobless claims figures, and Taiwan's semiconductor manufacturing company reporting declining gross margins didn't help either. This was a Daily Market Comment here at XM.com. Have a great weekend.